To understand whether any major bears remain in the cryptocurrency market, it's enough to look at the latest report. According to the data, US Bitcoin exchange-traded funds ETFs recorded a net outflow of $869.9 million on Thursday. This marks the second largest outflow in history, which explains why no one seems willing to buy Bitcoin even below 97,000. According to SoSoValue, many trusts led the withdrawals with $318.2 million in outflows. BlackRock's IBIS saw a net outflow of $256.6 million, while Fidelity's FBTC lost $119.9 million. Grayscale's GBTC, along with ETFs from ART and 21 Shares, Bitwise, Van Eck, Invesco, Valkyrie, and Franklin Templeton also recorded net outflows. For reference, the largest single-day outflow occurred on February 25, 2025, when funds lost $1.14 billion. The situation is worsened by broader uncertainty in the crypto market, triggered by a sharp shift to risk-off sentiment after news that the US Federal Reserve does not plan to continue actively cutting interest rates, contrary to expectations earlier this autumn. This increases pressure on investors, pushing them to reduce exposure to riskier assets, Bitcoin among them. The significant capital outflow signals risk reduction, reflecting institutional pullback amid macroeconomic noise, Chrono's research stated. The observed outflows restrain short-term momentum, but do not affect broader structural demand. However, it's important to understand that the outflow coincides with oversold conditions, opening the door for long-term investors. Trading recombinations Bitcoin buyers are now targeting a return to 99,400, which would open the path to 102,400, and from there to 105,300. The furthest target is the high around 107,900, whose breakout would signal attempts to restore a bullish market. If Bitcoin falls, buyers are expected around 96,000. A move below this zone could quickly pull BTC down to 93,000, with the furthest target at 89,200. Ethereum, a clear consolidation above 3,256, opens a direct path to 3,390. The furthest target is the high around 3,529, and its breakout would strengthen the bullish trend and increase buyer interest. If Ethereum declines, buyers are expected around 3,088. A move below this zone could quickly drag ETH down to 2,920, with the furthest target at 2,756. Chart indicators. Red indicators represent support and resistance levels, where a slowdown or active price increase is expected. Green represents the 50-day moving average. Blue indicates the 100-day moving average. Light green signifies the 200-day moving average. Crossovers, or tests of the moving averages, usually halt or set the market's momentum. The material has been provided by robotfx.org.